All right, credit unions, too often compliance is seen as a roadblock. But what if a strong strategy could actually not only protect you, but give you room to grow? Expert Connections starts now. Staying compliant in today's regulatory environment is more complex than ever, especially for small credit unions juggling limited resources. But that doesn't mean that if you ignore compliance, the risk will go away. It just makes it harder to work with, harder to manage when issues come up. Welcome to Expert Connections. I'm Julie Holton Smith. Our expert today is here to help us decode the often tricky world of compliance. Join me in welcoming Melissa Osborn, Chief Operating Officer of Comply Yes. Melissa, hi, welcome to the show.
Hi. Thanks so much. I'm happy to be here.
Let's start with the basics, decoding the basics. What do we really mean when we talk about compliance, specifically in the credit union world?
Well, and compliance always tends to sometimes have a narrow view in some credit unions, but it's actually more than just like the federal regulations that we usually hear about. There's, of course, the federal statutes and regulations, there's state laws, but of course, you can't forget your policies. And that's an area of compliance that sometimes gets overlooked. I mean, if you have it on paper and it's been adopted, it's something that has to be complied with. And as far as compliance, and that view that it's a negative, it's something that we have to live with, a necessary evil. Compliance actually can be a beneficial piece within a credit union because it really keeps everyone within the credit union on the same page. So you know everyone is going to do things the same way. You don't have like some rogue employees that may not be trying to do something that's wrong, but maybe doing something different than everyone else that ends up taking you down a path that could get you in trouble later. Compliance can even help you look forward on new products and services so that you can avoid some of the pitfalls. There's nothing worse than trying to start this brand new, beautiful product or service just to find out that you've got to go back, maybe pull it back and fix things, maybe refund members or a number of other things because certain steps weren't thought through. So compliance can even be within a credit union, something to help look forward, find the risks, and try to avoid anything that could slow down your product or service, cost you money later, anything like that. Compliance just keeps everyone on the same page and helps things run smoothly.
Okay, so I hear you. It can be this and should be this positive thing that can pull people together, pull an organization together. But why is it so difficult, it seems, for credit unions, especially smaller ones, to find and keep compliance professionals?
Compliance professionals are a difficult thing to find because not a lot of people really enjoy this field. I've actually had people tell me that it's deeply unsettling to see someone in compliance smile this much and get this excited about it. It's not a common thing for people to really love compliance. And part of it is because it is written in this bizarre language, written by regulators, almost like they're trying to make it so that you can't understand it to follow it. And having this like foreign language in English in front of you, it's hard to find someone, one, that wants to read it, two, that understands it, and three, that likes it. And when you find those people, because they're so hard to find, there's not a lot of us out there. And then there's these big institutions that will actually be willing to pay more to get them. So now any smaller institutions aren't going to be able to afford to have someone that has all of these pieces all together. So it's really difficult for credit unions of any size, but especially smaller ones, to have a compliance professional stay with them as soon as they realize if there is a small like credit union that has a really good compliance officer. Soon as they get a message on LinkedIn, from somebody recruiting that they could get paid a lot more if they just moved somewhere else, a bank or a larger credit union, they may take that offer, taking care of their own family. So it's just tough. It's tough to keep them. Sometimes you may even try to train people internally, and as soon as they realize that they can use this training to get a better job, they leave. So it's tough to find really good compliance people because of the nature of the job. It's hard to find people that really fit that mold. And then, two, keep them when they realize they could get paid more at a larger institution.
So it's easy to see why, especially for, say, a small credit union, when just the word compliance feels like a burden. It feels like this necessary evil, as you described. And then now finding someone to be able to help them navigate through that is going to be complex. It's no wonder, right? I'm wondering, is it more technical knowledge that makes, a compliance person really at their best, or is it the ability to translate the complex into the more real life, real world guidance? What makes for, a really strong person?
A little of column A and a little of column B because you want someone that has the technical knowledge. And when I say technical knowledge, it's not memorizing all of the pieces, it's really knowing where to look and having the technical knowledge of, I know when this question comes up, I know exactly where I got to go to find the answer. And to be able to translate it so that the people around you in the institution can understand what you're talking about. So it's a little bit of both. And translation is probably the biggest piece, though, because you can always just take something out of a regulation as a citation and send it to someone, whether or not they may understand like the baseline, but how it applies to them can be a different animal as well. And for small credit unions, to have the time, especially when you have so many of people in smaller credit unions and mid-sized credit unions wearing so many hats, to have the time to do the research, even if they can translate it or have some basic knowledge of maybe how to understand what it's saying, the time it would take them to get all of that information and then translate it can be a burden as well. It can just come down to a time issue. And it is important to have in the credit union itself. And it's tough because they can't always find the people. They may have even trained someone that may have like a certification, but again, they're wearing a lot of hats. They may spend most of their time just doing the Bank Secrecy Act alerts in their system and not really having the time to go through and maybe read all the policies before a board meeting and mark them up for changes. Or another rule change comes along and now they've got to go through all their disclosures, and having that time, or having another department ask a question, having the time to do it can also be a burden, even if they do have somebody there. And it is important for the survival of the industry, and especially for the small credit unions, because that's really where that heart of the credit union movement started, is in these small institutions, especially in these communities that may not have any other financial options. We have a very small credit union we work with where they are the only financial institution in that rural community that's doing consumer loans. It's more of a vacation community. So they have like a large bank there that will only do like vacation mortgages, but not really anything else. So if a local needs a small car loan, they would have to travel over an hour to find a financial institution that does consumer loans. And so that small credit union is part of the survival of that community. So having compliance help available for these small credit unions has become crucial.
Yeah, so how do you know when it's time to bring in someone, whether it's, a second set of eyes or something more in depth? Where does that line fall?
Unfortunately, sometimes it's when the examiners come in and they tell them. So sometimes during examinations, they may be going and looking at things like policies. The past, I want to say like 5, maybe 6 years, we've seen, especially the NCUA, going after policies and they're reviewing them to see how often have they changed. Have you actually been reading them before taking them before the board again? And they've really come down hard on credit unions of all sizes on something like that. It could even be like through an examination thing that they want someone to review just on like truth in lending issues, like how are they actually calculating like the APR correctly and making sure that they're within the tolerance. So an examiner may find something, and of course now the credit union again, the time issue. Are, you'll have people wearing many hats going, do I have time to go through all of this to remediate this exam finding? And that's a lot of times when they reach out for help because they just don't have the time for it.
Okay.
Sometimes we get them in advance because, they might want an audit done. They know they need an audit done, so they come to us for an audit. But sometimes it's actually they run into the issue first instead of the preventative compliance. Sometimes we get the reactive compliance.
Which, of course, preventative would always be better, but you know what they say about hindsight.
Yep. And with preventative compliance, it can be hard to quantify how much you would save, but I mean, if it's preventative, good. You don't know how much it's going to cost you in that reactive sense.
Mhm.
So to try to let credit unions know like the positives of just preventative compliance can be a challenge because they don't understand the cost until they have to pay the cost.
I want to talk now about the current landscape. I think it's pretty safe to say that it's a very anxiety ridden landscape right now. I think anytime, no matter where you are on the political spectrum, I think anytime there's a change in administration or other changes going on, change in and of itself, causes some anxiety. So, what's driving that right now? What has changed in the last few years?
Well, and I've been in compliance for a long time. This has been probably the strangest year in compliance I've ever seen. We always see that pendulum swinging back and forth between more regulations and then some deregulation as administrations change. This has been different. This has been a rollback like I have never seen. And I mean, that can be good and bad. All change will cost you money. So any change in regulation, that's going to potentially have changes within the credit union. But this has been strange in the sense that it's come on so quickly and in the form of more like executive orders and then challenges within the court to see if they're going to stand and then seeing if it's going to actually change the text of the regulations. So you see something coming, but you're not sure if it's going to stick. And then is it going to stick? Maybe this one will, maybe this one won't. And it's kind of that waiting game. So even when I've been asked to talk about things like, hey, can you talk about overdraft fees? I will start a presentation just to see that, okay, now we're going to see a rollback. Oh, wait, that's challenged in court. Okay, well, now we've got to see because, oh, wait, the court ruled this way, but then it went to another court that may rule the other way. And to just try to figure out how are we going to actually address overdraft in this kind of environment as it swings back and forth and the rules still is within the Federal Register. So is that going to change as well? And then you have to wait to see if that's actually going to be rescinded out of the Federal Register. So it's been wild going back and forth. But the important thing to remember that even when you have that regulatory whiplash that we've been seeing, the pendulum will always swing. We will always see administrative changes. We may even see that with some deregulation, we're going to see bad actors like we did in 2008 with these large banks that were gambling a little too much with mortgages. Then we all had to suffer through the regulatory environment that came after, including a whole new agency to actually start regulating and enforcing these rules. So, in an environment like this, where we see a rapid deregulation, we have to remember that pendulum can swing, and there's also potentially bad actors, which I've seen some already that have come out more on the credit card fee rule, that even in the press flat out said, yeah, even though we raised all these other fees and interest rates in anticipation for this, even though the courts rolled it back and it's gone now, we don't have any plans whatsoever of reducing it. We're making too much money. So when we see bad actors like that could potentially just like hit all of us, that's when we really have to think about the risk buffering. So we want to kind of stay in that middle ground where, yes, we actually have a little more leeway. That's great because compliance is also about finding a way to do what we need to do to help our members and give them what they need while still following the rules. We have a little more flexibility now, but we want to make sure that when the pendulum swings, it's not going to hurt as much. So we're not going to be hit so hard and have these drastic changes. So finding that middle ground of, yes, we have flexibility, but you know what? We're going to be able to consider our own member consumer harm in that process. And that way it kind of helps us that as these back and forth like whiplash environments happen, we're not going to actually be hit with as many changes. It takes a little bit of forward thinking, and also we can't really control kind of what some of these bad actors are. Some of these like larger banks that are in the press talking about how they really don't care because they're making too much money on this. that, we just got to be able to do what we can to make it so that the impact on us kind of is minimal as the change happens around us.
Okay, so let's pair this together with that concept of preventative compliance, of really being proactive and working to get ahead of these changes. And as you said earlier, to do what's right for your customers. Can you walk us through the difference between maintenance and cleanup?
Maintenance is easier because, there's that concept of, well, we've always done it that way. And then just trying to kind of stay within those boundaries. The cleanup kind of comes when the maintenance that I've always done it this way or we've always done it this way kind of gets out of hand because you have familiarity blindness in those cases. And the familiarity blindness, like even when you read your own policies, you've read them so many times it's sometimes hard to see the flags that need to be changed. And that's when the cleanup comes in. So having a fresh set of eyes look at something for you where I really need these policies reviewed, or these disclosures looked at. I've read them a million times. They seem fine to me. We've always done it this way. That maintenance, you can have compliance maintenance, that's great, but having that fresh set of eyes can help you prevent the cleanup piece. Because once it gets a little out of hand, that's when we kind of see the examiners having their fresh set of eyes on your disclosures and policies and loan files and things of that nature. You don't want them to be the ones just to discover any of the things that need to be cleaned up. Sometimes just takes an extra set of eyes.
All right. So here's a question that I encounter a lot, whether it's we're talking about credit unions or in the startup world, when it comes to innovation and people who are really working to be forward thinking, really working to push ahead to what's coming in the future. How do you create a flexible environment while also balancing innovation with compliance?
That can be tough. There's the whole image of a compliance officer being the no person, the Debbie Downer of the credit union. So the idea of a credit union having like, oh, well, we love compliance because the compliance person for us can be flexible and find a way to say yes, that's just not the reputation. Hence why a lot of people are just like, we hate compliance. We automatically assume it's going to be a no. Flexibility does come with that understanding what the rule means. What is the intention when the regulator is like with TRID and the new mortgage rules? What was the intention here? And then how can we work within it while still providing a great service and not upsetting our regulators and maybe not getting ourselves into trouble at the same time? Nobody wants to see a bunch of foreclosures like we did in 2008. It really comes down to like I said, understanding that rule. How are we going to find a yes? Hence our name comply. Yes. How are we going to find a way to provide what we need, be flexible with it, and stay within the parameters and the spirit of the regulation and statute? There are always going to be some hard no's. You never want to like repossess a car that is for an active duty service member. That's an SCRA violation. So, things like that. There's hard no's, but there's also room sometimes. It just takes a little bit of time. It takes understanding the regulation and understanding the product and service and the membership to get there. So it's kind of a formula to have the flexibility and it can be tough. It takes time that not a lot of credit union staff really have.
Melissa, do you find, are there any unique compliance challenges that small credit unions may face that larger institutions may not?
I think probably the biggest compliance challenge is the ability to have a full-time compliance like staff person, any type of compliance officer. Large institutions can have a compliance department with different people doing different things. You can have somebody who's going to handle the internal and external audits. You can have the compliance person who's responsible for like actually the reviews and helping the different departments. And then you have a compliance person that's going to be handling the Bank Secrecy Act alerts and things of that nature. They can actually just continue to add more staff to help keep them afloat. Though honestly, like we still get requests for help from large institutions because at the end of the day, compliance can be tough. Again, sometimes you need that fresh set of eyes. But for small institutions, it's the ability to have a compliance person. And if you do have one, they're most likely going to be dedicated to those Bank Secrecy Act alerts and maintaining that. And they're not really going to have the time and the dedication towards anything else that falls under compliance. And honestly, when it comes to the Bank Secrecy Act, or as we just call it BSA, I would consider that kind of a separate like job than general compliance anyway. But a lot of times, because they're called BSA officers or BSA compliance officers, they tend to get lumped together. But just like have the amount of time it takes to really manage that, it means that all the other pieces of compliance are going to be neglected a little bit. It's just based on time and who you can afford as a staff person. So for smaller credit unions, that's really what it comes down to, the time and the money that it would take to have someone dedicated to it. Large institutions can absorb those costs.
Which is also why Comply Yes was created to be able to tell us a bit about Comply Yes and what you do.
Well, we are just we're a vendor, a third party that actually is our specialization is in financial compliance, generally credit unions. We all came from the credit union world, except for one employee actually came from the banking world, which is great because he absolutely loves credit unions now. But that's really where our set of expertise is that we are just credit union focused and we are credit union owned as a credit union service organization. And we exist to help those credit unions fill those compliance gaps because there is a lack of just good qualified compliance officers in general. A lot of the times when I see a compliance job opening up, they're filling it with a compliance officer from another credit union. And it's just like a game of compliance musical chairs between credit unions. We're just stealing them from each other. So we're trying to help them fill that gap. They still need compliance. Like that's just something they'll daily need help with. They can, and if that vacancy exists or that shortage continues to exist, they still need someone to help them. So we exist to help credit unions of any size with whatever type of compliance needs that they have. But particularly like my heart is also with helping those small ones survive. They're not going to be able to afford to hire someone like me as a full-time staff person. But they need the kind of expertise that I would be able to provide. And this is the way that we can do that by having that shared model where, we have compliance experts that can help multiple credit unions. And that way they don't have to take on that compliance burden by themselves. Where now it's not just a full-time employee's salary and benefits and all of these other things that you have to worry about. You can just pay for the types of services you need. And that really helps them get the expertise that they wouldn't be able to have otherwise.
I want to wrap this up by circling back to something that you talked about at the very beginning, which is not thinking about compliance as being limiting, although at times it will feel that way, but thinking about it as being empowering. Can you talk to that when an organization partners with a compliance professional? How can that be something that is empowering to the credit union?
It will really help some of them feel more like they can take a little more risk on new products and services. You have to take a little bit of risk to grow. That is just the nature of growth. Credit unions tend to be very risk averse. And if you have someone with really good compliance expertise, they can help you manage that risk the best way possible so that you can take on new products and services. So it's not always limiting. It can help them understand what they would need to do to grow and to look forward and to kind of do the best we can with a little bit of prediction of like how certain products and services are going to impact them. Like if you're going to start something new, like I've worked with credit unions that don't have overdraft. And if they want to think about overdraft and offering overdraft, there's a lot of things they need to consider and to help them think through what should you do to avoid risk, not just with like, oh, are we going to be sued because our disclosures weren't properly explaining how we figure out what the balance is. It's also the risk of what about losses? What about, these negative balances that may not be paid back? So helping them kind of think through all of the what ifs so that they can start offering something that members want and need on occasion, and then helping them feel comfortable with it so that they can move forward with these new things. Sometimes it seems so scary because there is a potential for some, like all these risks are there, that they just don't do it. But compliance can actually help them get there and help them grow.
Melissa, this has been such a great interview. Thank you so much for being on the show to share your insights today.
Absolutely. Happy to do it. Thank you so much.
Melissa Osborn, Chief Operating Officer of ComplyYes. We will link to all of your information in our show notes. I encourage people to reach out and learn more about ComplyYes. That is all for this episode of Expert Connections. I'm Julie Holton Smith. I'll see you over in the next video.